Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Here we are with another episode of Black and White Market Minute on Life Planning 101. Matt, Ervin, Aaron Kennedy, and Sam Barker with you today to talk a little bit about some investor fatigue, some volatility, some changes in the market. So tell me a little bit about, we're talking about volatility and maybe a shift in sentiment towards the Mag 7. Maybe we're, getting away from them a little bit. Maybe we're staying, or how'd you put it? The other stuff, meaning the core market, is more of a slow DCA or slow fund flows, which, slow flows creates low volatility, the slow buy sells in the market.
Yes. And you know what? Lower volatility investing, that is a factor that we actually invest in. And, over time, that factor outperforms the market. It's a beautiful thing. And if you think about really what it is, it's investing where it's boring. You just sit in there. You're not doing a lot of buying. You're not doing a lot of selling. You're just holding for the long term. And, one of the best ways out there to make money in the market is to lose your password on your account.
There you go. I like that.
That is one of the number one. So you just take that back to volatility. And if you're not making these crazy swings or decisions, usually you're very successful. So volatility is one thing we look at because we want to see it where the market is not changing its mind on a daily basis. Well, that's basically what it boils down to.
And that's what you're seeing right now, right? With some of the AI headlines that came out recently, you saw huge surges in certain areas of the market.
Yes.
But that's just based on the buys and the sells.
Yeah.
The company doesn't get 20% more profitable in one night. The perception of their future growth changes,
yes.
Right? And
it's all about the future.
Yeah.
And that's exactly right. And one thing we like to look at is I like to look at the NASDAQ versus the equal weight. So if we look at the NASDAQ, the Magnificent 7 is about 40% of it. Now, if we take a step back and say, well, what is the volatility of the NASDAQ? And as I say, this year, that volatility has increased by about 60%.
Wow.
Now, if we look at the market as a whole and say we're going to equal weight everything, so every single company that we can invest in has an equal say in what's going on. If we look at that volatility, it's down about 3%.
So nothing else is moving as much. Doesn't mean it's not moving, it just means it's not moving anywhere close to as much.
Really seems like the people are making a day-to-day decision whether we're at the top on those 7 companies. A day-to-day decision. We are seeing huge swings. I mean, yesterday I think the NASDAQ was up 3%, 2.8, so just somewhere around in there. The equal weight was barely up 1. And what was it? That was NVIDIA. They blew through the roof. What was yesterday's return on there? 16%?
Yeah.
16%. That one company is the size of China.
And I think that's the thing to remember is when we talk equal weight versus market cap weighted, right? The size of the company. Those companies are so massive when it talks about, value, their worth. So it's a skewed horizon when, would you say that the Mag 7 is 40? 40% of the whole index. Of all the companies out there, it's 40%, those 7 companies.
So put this in perspective. Yesterday, NVIDIA grew the size of McDonald's.
Jeez.
The size of McDonald's. The entire size of the company. That's how much that company grew yesterday. And like you said, their revenues and their earnings did not grow.
Right.
The size of McDonald's.
No, the perception.
The perception did.
Yeah.
Another note on those 7, really it's not 7 as much anymore. You had Tesla is down year to date, and it's down pretty heavily. So it seems like it might be changing from the Mag 7 to more like a a 5 number instead of
Yeah.
all 7.
I heard it this morning. Fabulous 4.
Fab four, good. I was going to ask, was this like the Sweet Six? Or
Yeah. Sam and I were looking the other day, and golly, this really reminds me of back in the 90s where, you wanted to be in the market. Then you wanted to be in growth companies. Then you wanted to be in technology companies. Then all you needed was Cisco.
Right.
And that was the deal back in 99. Well, guess what? Cisco still has not hit its peak since 1999. That's how feverish that market was. And it feels a lot like that. Now, I'm not scared of a 90% drop or anything like that because these are the highest cash flow companies in the world. But they're expensive.
Yeah.
So one thing we got to remember is these companies can grow 50%. And now we're talking about growing revenues and growing income. But the stock can stay flat. And all that is those prices come back to normal. That used to be a pretty normal thing when it came to Apple. It'd go on a huge tear and not do anything. And a huge tear and not do anything.
Like catch up?
Yeah. And it's basically the company was growing into its valuation. So it doesn't necessarily mean the end or the stock's going to crater. We need a breather.
Right.
Let the company catch up to the stock. Because we always got to remember it's two separate things.
Yeah.
The stock is not the company and the company is not the stock.
Yeah. Well, and you made an interesting point earlier too, because we're trying to kind of navigate to see what some of this volatility means. And I think you mentioned some of the consumer sentiment boards are trying to figure that out too. And those are the companies that give us the fear greed indicators and say, how greedy or fearful are people when it comes to the market. And they were changing their outlooks up or their data set up a little bit.
Yes. Capitulation. That's what we were talking about. Yeah. We're all changing our minds right at the top. This time's different. You just don't understand all this. And we're seeing it. The confidence board, and if you've been with us a long time, you've heard us talk about these leading economic indicators. They've been preaching that we're in a recession for a while now. And we really haven't hit it. So now let's change the rules because this time is different.
Yeah.
So,
well, and the Fed did some of that too through the interest rate cycle. They changed what they're looking at, and now it's like based on what they're anchoring to, they're saying, well, we're still too hot to lower rates.
Yes.
But they just haven't broken enough stuff.
They have not broken enough stuff, and our economy is resilient, absolutely resilient. And for us to be growing through how do you say this? Let's just say for us to be able to grow through this many changes, not only from a market standpoint, but an economic standpoint, from a social standpoint, there's been huge changes. I mean, if I went into a coma in 1999 or not 2019 and woke up today, I mean, you just think what?
Right.
You would have no clue. You would think you're in a different universe, or you never woke up. This dream cannot be happening.
Well, and the market seems to be forgetting some of the things that are going on because I didn't realize the Ukraine war is coming up on the 2-year anniversary. I mean, to think it's been 2 years, it's like, you hear it every day. They need more money for this or that. It's like that's a fight, but still, you forget time's flying by.
Time is absolutely flying by. And when it comes to that, the war, and I'm not, well, that sounded bad, but, that's one of the problems that we really have, is we know we have these inflationary pressures, and we know we need to get things slowed down a little bit, but we're spending so much money. So it doesn't really matter how high they raise the interest rates. It doesn't matter how many bonds they buy back because they're just turning around and spending it again. So it's a very difficult time. But the important thing to realize is the government is spending money like no other. And that's going to continue to drive the economy. That money has to go to somewhere. One of their buddies spends it, then eventually, the person that he spent it to, they spend it. It just works its way through the economy.
Right.
And what was budget deficit? $1 trillion.
I don't know.
That's
Right.
And we bought back $50 billion in bonds, and so we're doing a good job.
Right. Yeah. False positives, but no, that's good. That's good. Well, we're getting towards the end of today. Is there any last minute themes or topics you want to go through, Sam? Do you have anything to throw in? Or?
Not a whole lot. Real quick, just interest rates seem to be slowly uninverting. So the short-term interest rates are staying about the same, and the long-term seem to be slowly catching up. Specifically, the 10-year and 2-year spread is starting to shrink. Going back to kind of government spending and things, one thing that the government likes to tout right now is the unemployment rate. Well, the government hiring rate has been on a frenzy the past year, 2 years. So a lot of that spending is going straight back into the economy through the hiring. So
good point. Very good point.
That's one thing that we're keeping an eye on too.
Very good point. And I want to go back. We are moving in over 2 years of a negative market. Over 2 years. And this usually lasts about 14 months. So we're overdue a big correction to the upside. We have the majority of companies, and I'm not saying greater than 50%, it's way higher than that. 85 to 90% of the companies have not benefited really from this big market move.
Right.
So if you're putting money to work, unless you're going with the top 10 companies, the S&P 500 or the NASDAQ, you're getting fantastic deals. And I think this is really right for market correction upwards. I'm super excited about that. That feels a lot like the early 2000s where technology tanked and the other companies that were left behind, they were growing 15, 20% a year.
Yeah.
So I think we're really set up for that. Even looking at the volatility and the price movement, it seems like a lot of people are starting to believe that as well.
Yep.
So
that's great.
Probably be more volatile this year, but I think it's going to be a good year.
Well, we always talk about that. The point to point looks great, but the ride on the inside is a little bit rough. And so it's great. But would you say really lose your password and you'll be fine?
Yeah. Don't look at your account, and that's the most successful thing you can do.
I guess, or you can call Sam, right? If you lose your password, call Sam. We'll talk you into losing it again. So,
I don't know how compliant that is.
Right. Oh, okay. All right. So for our compliance folks, keep your password safe.
Yes.
That's great. Well, thank you, gentlemen, for today. We appreciate your efforts pouring into this so much. And as always, our listeners out there, if you have any questions or thoughts or things that you want to know more about, if it inspires or intrigues your thought, we'd love to hear from you and feedback. And we want to keep our content to what you want to hear about. So we'll wrap up today's episode of Black and White Market Minute on Life Planning 101.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.